Hello everyone, and welcome back to the channel where we demystify the markets and uncover unique trading opportunities. Today, we're shining a spotlight on a fascinating microcap in the healthcare sector, BJDX Inc., trading under the ticker BJDX. This stock has hit our hard-to-borrow screener with some truly eye-popping numbers, making it a prime candidate for a deep dive into the mechanics of a potential short squeeze. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Show BJDX chart. Let's zoom in on BJDX Inc., or BJDX. This medical devices company is focused on its Symphony technology platform designed to provide crucial measurements of diagnostic biomarkers in blood. It's an intriguing area of healthcare, but in the world of microcaps, volatility is often the name of the game. Looking at the recent price action for BJDX today, it's seen a respectable gain of plus 9.57%. However, if we pull back the lens, the last 5 days show a dip of 5.77%, and over the last 30 days, BJDX has plummeted by a significant 75.59%. Highlight 30-day drop. Volume-wise, today saw 395,759 shares trade hands, which is a mere 0.1% of its 30-day average volume of 5,659,658 shares. This suggests a current lack of liquidity compared to its recent past. What is cost to borrow and why it matters? So, what does it mean when we say a stock like BJDX is hard to borrow? At its core, the cost to borrow, or CTB, is the annualized fee that short sellers must pay to borrow shares of a stock before they sell them short. Think of it like renting a car, you pay a daily fee. For short sellers, this is the fee they pay to hold their short position. When a stock CTB starts to climb, especially into the triple digits, it signals that demand to short the stock is incredibly high, or the supply of shares available to borrow is incredibly low, or both. These fees can and often do exceed 100% annualized, sometimes even reaching hundreds or thousands of percent, because the cost is calculated daily and compounded. It's a direct reflection of the supply and demand for those borrowable shares. Why this stock is hard to borrow right now. Now let's talk about why BJDX popped up on our screener. Its current cost to borrow fee stands at an astonishing 745.4% annualized. Show text of relay, CTB 745.4%. That's an extremely high fee, signaling significant demand from short sellers or a severe scarcity of shares available to lend out. With an estimated float of just 0.9 million shares, BJDX is an incredibly small float stock, which inherently makes shares harder to come by. We don't have specific data on the shares currently available to borrow, but with a CTB this high, it's safe to assume the supply is extremely constrained. Our internal composite squeeze score for BJDX currently sits at 40.5 out of 100. This score factors in not just the CTB level and momentum, which, for BJDX, is off the charts high, but also the shrinking borrow supply, the tiny float size, and price and volume momentum. While 40.5 is certainly noteworthy, it's not a guarantee, but rather an indicator of potential pressure. Squeeze mechanics explained. For those new to the concept, a short squeeze occurs when the price of a shorted stock rapidly increases, forcing short sellers to buy back shares to limit their losses. This buying action, in turn, pushes the price even higher, creating a snowball effect. In a stock like BJDX, with its super high cost to borrow of 745.4%, short sellers are paying a hefty premium every single day to maintain their positions. If the price starts to move against them, or if the cost to borrow keeps climbing, the pressure to cover their positions intensifies. They might be forced to buy back shares at higher prices just to stop the bleeding from both the rising stock price and the exorbitant borrowing fees. This forced buying against a limited float can lead to explosive, rapid price movements. Dilution risk check. An important factor to consider with any potential squeeze candidate is dilution. Dilution occurs when a company issues new shares, increasing the total number of shares outstanding. This can significantly offset or even negate a short squeeze thesis because it adds more supply to the market, making it easier for short sellers to cover and harder for the stock price to climb. For BJDX, we've checked recent SEC filings and found no recent diluted SEC filings such as -1, -3, or 424B forms in the last 90 days. This is a positive sign for any short squeeze thesis, as it suggests the company hasn't recently flooded the market with new shares that could absorb short covering or depress share value. We also found no recent reverse splits for BJDX in our look-back window. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, what should we be watching for with BJDX? First and foremost, continue to monitor that incredibly high cost to borrow fee. Does it stay elevated, or perhaps even tick higher? Also, keep an eye on the shares currently available to borrow, if that data becomes accessible. A shrinking supply can be a major catalyst. Volume is another key indicator. Remember, today's volume was only 395,759 shares, a fraction of its average. A significant surge in volume, especially on upward price movement, could signal increasing interest. Also, watch the price action for BJDX after a 75.59% drop over 30 days. Any sustained reversal could put pressure on existing short positions. However, it's crucial to remember that a high cost to borrow does not guarantee a squeeze. It can also signify that short sellers have incredibly strong conviction in their bearish thesis and are willing to pay those massive fees because they believe the stock is headed significantly lower. BJDX Inc. BJDX presents a compelling case study for understanding hard-to-borrow dynamics and short squeeze mechanics. With its microcap status, tiny float, and an astronomical 745.4% cost to borrow, is certainly one to keep on your educational watch list. But always remember the risks involved with highly volatile stocks. What are your thoughts on BJDX? Let us know in the comments below. If you found this explanation helpful, please hit that like button, subscribe for more educational content, and share this video with anyone looking to understand the intricacies of hard-to-borrow stocks and short squeezes. We'll see you in the next video.